Hey guys, welcome back to another episode. In this video we will be going through our very simple yet profitable descending triangle pattern trading strategy. As usual, we'll have plenty of practical examples. The idea is to fully understand this wonderful trading strategy and to make the most out of it. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell, and share this video across your WhatsApp, Facebook accounts, or Twitter to show your support. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto, because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. Descending triangle pattern trading strategies. The descending triangle pattern is a type of chart pattern often used by technicians in price action trading. Descending triangles are a very popular chart pattern among traders because it clearly shows that the demand for an asset, derivative, or commodity is weakening. The pattern usually forms at the end of a downtrend or after a correction to the downtrend. However, it can also occur as a consolidation in an uptrend as well. Chart technicians can make use of the descending triangle pattern in order to trade potential breakouts. Many other trading strategies can blend well with the descending triangle chart pattern. It fits perfectly well within an investor's buy and hold strategy. The descending triangle for bearish and bullish market. Contrary to popular opinion, a descending triangle can be either bearish or bullish. Traditionally, a regular descending triangle pattern is considered to be a bearish chart pattern. However, a descending triangle pattern can also be bullish. In this instance it is known as a reversal pattern. To that point, the descending triangle can be viewed as either a continuation pattern or a reversal pattern. The triangle continuation pattern is your typical bearish formation. This pattern occurs within an established downtrend. A very important fact to bear in mind when trading the descending triangle is that it is very subjective. Therefore, if you are new to trading the descending triangle stock pattern, you need to have a lot of practice. Familiarizing yourself with it in the simulator will allow you to build your own custom triangle trading strategies. Characteristics of the descending triangle. The classic version of this pattern forms with a trend line that is sloping and a flat or a horizontal support line. The pattern emerges as price bounces off the support level at least twice. The completion of the pattern occurs after the end of a retracement in a downtrend. The downside breakout from the support triggers a strong bearish momentum-led decline. This illustration shows an ideal descending triangle pattern, which is often labeled a descending wedge as well. Typically, the breakout from a descending triangle is triggered to the downside. The distance from the support to the first high is measured. This measured distance is then projected to the downside, where the target price can be set. However, not all descending triangles break out to the downside. You can also see an upside breakout from the descending triangle. In this case, it becomes a continuation pattern instead of a reversal pattern. The same concept of measuring the distance from the support to the first high is used to determine targets. This is then projected to the upside for the minimum price objective. In the next section of this video, we illustrate 3 descending triangle trading strategies that can be used. First, descending triangles with volume. This strategy uses a very simple combination of trading volumes and asserting the trend, which can be used to capture short-term profits. The first step in trading this strategy is to pick a stock that has been in a downtrend or in a consolidation phase. The time frame of the chart is irrelevant as you can use this strategy across any time period. Once you have identified a stock in the time frame, wait for price action to contract. Be sure to allow for some flexibility in charting the patterns. Once you have identified this price action, the next step is to draw or chart the descending triangle pattern. The basic premise of using this strategy is to look at volume once you've identified the pattern. You can typically observe that volume begins to diminish toward the end of the descending triangle pattern formation. This chart shows an example of the Apple stock chart. In the chart, you can see that the triangle pattern was formed after price action was trading sideways. After a brief consolidation, price falls lower before breaking out from the pattern. Volumes are usually lower closer to the breakout. Once you identify the lower volume, simply measure the distance from the first high and low. Then you project the same from the breakout area, which becomes your target price. We show this with the dotted lines on this chart. This simple volume-based descending triangle pattern is easy to trade, but requires lot of time to watch the charts. Here are other examples of the descending triangle breakout trading with volume. Second, descending triangles with Heiken-Ashi charts. Using Heiken-Ashi charts along with the descending triangle pattern, you can develop a powerful but simple trading strategy. Heiken-Ashi charts visually stand out compared to the conventional chart types. One of the main characteristics unique to Heiken-Ashi charts is the fact that they can depict the trend easily. Most traders often struggle when it comes to identifying the trend. You can resolve this confusion by switching to Heiken-Ashi charts. In this strategy, traders simply need to wait for the descending triangle pattern to be formed. Once the pattern has been identified, the next step is to wait for the bullish trend to pick up. In most cases, you will find that the Heiken-Ashi candlesticks turn bullish prior to the breakout. This can be used as an initial signal to prepare for long positions in anticipation of a breakout. This chart shows the Heiken-Ashi chart for Amazon stock chart on the 60-minute time frame. Notice that, prior to the breakout, the Heiken-Ashi candlesticks turn bullish. Initiate a long position after the first bullish Heiken-Ashi candlestick. Then, project the measured distance from the breakout to get the target price. Depending on your charting platform, you will notice that volume bars also change. This is because they reflect the bullish or bearish sentiment based on the Heiken-Ashi candlesticks. Volume bars serve an additional purpose to alert you to a potential bullish breakout. This descending triangle strategy with Heiken-Ashi charts is effective to trade in the short term. Here are other examples of the descending triangles with Heiken-Ashi charts strategy. Triangle Pattern Indicator. This triangle pattern indicator is a custom tool for technical analysis. The triangle pattern indicator is a MetaTrader 4 indicator used to detect the trading patterns in the forex, commodity, stock, and crypto market. It is used to detect the technical formations, and these technical formations are known as triangles. Triangle pattern indicator is a reliable and quite precise indicator. Traders can use this indicator because it gives accurate price movements and detects real changes in the indicator. In this video, I've included a template with the system that you can simply upload to your chart, and it will automatically plot all these indicators perfectly on your charts, so there's nothing for you to worry about. Get the download link on the description. And here are other examples of the triangle pattern indicator trading strategy. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell, and share this video across your WhatsApp, Facebook accounts, or Twitter to show your support. See you next time.